Welcome to the Elevating Leaders series, where we go beyond the headlines and straight to the people who are redefining insurtech and business transformation. We've caught up with the visionaries and the pioneers that are currently driving the industry forward, bringing you exclusive insights, strategies, and stories you won't hear anywhere else. If you're ready to go deeper, this is your front row seat to the future of insurance. I'm Miguel Edwards, and this is 5 Minutes.
If I kind of take a step back and I think about the concept of embedded insurance, how do companies interested in building an embedded insurance kind of offering, how do they think about finding market opportunities? What's the approach to do that?
Well, the best way is when the customers of those companies are already asking for it. So we have many customers that they come and say, well, half of my customers are asking for a special type of protection, and they're asking me, why can't I buy that through your platform? That's the holy grail. That's when they are very, from a sales perspective, those brands are very late in the funnel. We can convert, launch something with them, and there's a high probability of success. We've seen the other extreme as well. Unfortunately, when some companies, they don't really have a use case, there's no intrinsic risk that is part of their flows, and they're trying to do some embedded insurance product. That, for the most part, doesn't work.
Okay.
Because just the fact that you have somebody's attention, it doesn't mean you can sell them insurance. I heard an extreme example of a company in the past that they were doing outsourced customer support for, an airline or whatever, and towards the end of the call, the person would offer, by the way, do you have health insurance? That has absolutely nothing to do with this. So that is obviously an extreme example, but it is a real example that obviously doesn't work. And surprisingly enough, they were able to sell some policies, but as you can imagine, it's not a high one. Now, when the risk is intrinsic to that business, that's when you can see 20, 30, 50% attachment rates or buying percentages of that insurance, because it's mission critical to that work.
That's right. Yeah, I can totally relate to that. I think about would I actively go out and find an insurance policy for my cell phone versus buying it at the point of sale when I buy the iPhone, right? So it's additional friction, it's additional thought. So I'll just do it here. Yeah.
Or if even think about how could be the next step that you don't even have to think about, right?
Right.
What if Apple, and you have the AppleCare as already an example, but what if they just said, your iPhone is coming with protection, and it's part of the product, and if anything, obviously Apple was already doing it as AppleCare, but that example can go now to different types of products. You see Tesla doing the Tesla Insurance. So what if instead of buying a Tesla, you lease a Tesla, and out of the lease, $20 or whatever is the value, it's already added as insurance. You don't even have to think about it. The day you return the car, the insurance is gone. You don't have to call your carrier to cancel. They won't keep charging you if you forget. That's, I think, the beauty of embedded, and really becomes, again, the feature. So suppose you're renting the Tesla, right? The product itself is a Tesla rental, but that comes with insurance, can come with your Sirius XM subscription. It can come with Tesla, some other add-ons that they may have. So that's really the magic when embedded becomes like a huge value added to consumers.
Yeah, no, that makes a ton of sense. Matthias, I want to pivot on you, man, because as I listen to you talk, you've got an incredible kind of understanding and perspective of the industry that you've obviously you've been around, you've seen the thing. Take me through the journey of a founder, man, because it seems like you've honed in on a problem, you've built a great solution. Talk to me about the early days and how you got to where you are.
Yes, so we were one of those stories where we're building the product that we wish existed in our previous jobs. So both my co-founder and I, we worked at Turo as early employees, and we got involved in insurance by accident, I guess, by like many people in the industry. And then we saw the power of Turo, and it wasn't even called embedded insurance yet, but we saw a software platform like Turo getting really involved and taking advantage of insurance. And we were amazed by it, but we also saw how hard it was for us at Turo without the proper tools, software, without the proper know-how in insurance, relationships, to actually get those products off the ground. And I was running international, so I negotiated insurance in Canada, in Europe, in Australia, and it always very, very hard to launch those things. So then we were basically created a product we hoped it existed. So there was a very kind of good connection. But as a founders, one of our main challenges, we realized, okay, the vision of this end-to-end platform to help others like Turo, it's gonna take us a long time to build, and I don't have the resources to build all at once because it requires a lot of software, services, licenses, and whatnot. So for us, the first 2 years or so were an exploration to try and figure out what is the smallest piece we can build, start adding value, and then continue to build the platform on top of that.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.